Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is Forex Quick Look. I'm going to take a look at the dollar versus yen and the sterling versus US dollar, so sit tight. We're seeing the dollar move higher. We did get GDP come out a little bit better than expected. Also saw initial jobs claims move lower. And also debt ceiling is near completion. And also the question is no longer if the Fed will hike, but when. And all that is pushing the dollar higher. So let's take a look at the dollar versus yen from a technical perspective here to start things off. And if we look at the 50% retracement of this move down from this high right here, the 2022 high to the 2023 low, the 50% retracement came in at 139.57. I've been talking about this level as being a key target, or the next key target on the top side ever since the price started to trade back above this swing area. And we based earlier or last week right against the low of this swing area, and then trading this week we based against the high of the swing area. Both those were positive, keeping the bulls more in control, and the 50% retracement seemed to be the target that the price needed to get to and through as the next key target level. Now we've moved up to a near a high of 139.889, which happens to be this high price right here. And so the price is seeing some stall against that level, but trading just above just above the 50% retracement, currently at 139.69. That 50% retracement comes in at 139.57. If we can stay above that, that would be the best case scenario for the buyers, is to stay above that level, maybe even go down to 139.39. That was near the high price from yesterday, and also going back in time to this high rate through here. So watch 39, watch 57, stay above it. The buyers remain in firm control. Get above the 89 level, and traders probably look toward this next level around the 140.29. Can't ignore 140, of course. That's a nice round number. So that's how I see the dollar versus yen. Bulls remain in control, as the Fed seems like it's going to have to tighten at least one more time at the June meeting. We'll see how that all plays out. In the sterling versus US dollar, we aren't making new lows from on this pair. The low, most recent cycle low comes in at 123.31. That's the lowest level going back to April 3rd of 2023. But we are trying to move below this and being successful in moving below this swing area. This swing area was a ceiling through here, broke above that ceiling, then tried to hold support against it, couldn't do it, became a ceiling once again once the market broke below that level, but then moved above it, and then became a floor. It started to become a floor through here, early buyers here, and in trading last week, and the price came down into that area. And in this week's trading, we have seen some moves below the low of that area, but have not been able to sustain or actually this isn't trading today. The price moved below that area, but bounced back higher. What we did do is we did find sellers against this area right through here. We had swing low, swing low, swing low, swing low. So we did find resistance against that level, and now we're moving back down to the downside, helped by the stronger dollar. And so staying below the 123.43 level, up to 123.60 level, keep the sellers more in control. If we break below 123.31, that opens the door for this pair to ultimately head toward the 100-day moving average. That comes in at 122.848. We'll see if that level is where the attraction is for the sterling versus US dollar. If the bears can remain in control. Current price trading at 123.47, which is just above the low of this area right through here. So we are seeing some reluctance to go and make the new low below the 31 level, but the sellers remain in control below 123.60. So watch that level in trading here today. So there you have it. A look at some of the technicals looking at the dollar versus yen and the sterling versus US dollar. My name is Greg McCloskey. Good fortune with your trading today.